So in today's episode of Coffee in the Car with Jim, the real estate agent, we're going to talk about things you should not do, 3 of them that you should not do after you have met with the mortgage broker and before you have purchased and the deal has closed. And coffee today is coming from Sorry Coffee Company, and they are in Yorkville, and they're a really funny place actually. You got to check them out. They're connected to Kit Ace, and you can link to them down below. Again, that's Sorry Coffee Company in Yorkville. So back to 3 things that you should not do after you meet with your mortgage broker and before your purchase has closed. Number 1, do not, I repeat, do not go out and take out any kind of a loan. Like, don't go and buy a new car, don't go and lease a new vehicle. Like, don't make any major financial change that's going to affect your credit bureau. Because you may say to yourself, well, my mortgage broker has approved me for X amount, but the moment that your financial picture changes and you have more debt or different debt, well, that number may change. So do not go and buy a car or lease a car without first talking to your professional mortgage broker. I'm not a mortgage broker, but I'm just telling you, that's what you have to do to protect yourself and make sure that you don't blow up your opportunity to qualify for that mortgage when you find the right property. Number 2, sometimes clients that I've had have thought, well, it will be good for me to close out any bank accounts, like credit card accounts that had a 0 balance, thinking this will improve their credit rating. Again, do not do that without first talking to your mortgage broker, because it may actually have a negative impact on your credit rating, or on your credit score rather. So don't go and close out any old accounts or accounts that had a 0 balance without first talking to your mortgage broker. And then the 3rd thing, and I had this happen to me once with a client and nearly gave me a heart attack, they decided on kind of a whim to totally change their career, to quit their job and go into a brand new field. And that's a no-no. Again, don't do that without talking to your mortgage broker so you understand the ramifications, because in the end, my client was able to obtain the mortgage for the purchase they had already made, but that had not closed yet. But employment stability is a factor in qualifying for a mortgage. And so if at all possible, don't make any big employment changes during that period until the transaction has closed and the mortgage has been funded and you are in your new property. Thanks for watching this episode of Coffee in the Car with Jim, the real estate agent. Have a great one.